The third quarter of 2020 was another 3 months that was very fascinating and certainly part of the historic year of 2020. The actions we took in the spring with the economic shutdown appeared to be sufficient to reduce the spread of the virus. That, combined with government stimulus supporting consumer spending, actually generated some of the strongest summer returns we've seen in a long time. So it seemed we were well on our way to a V-shaped recovery, with July and August being one of the strongest summers in many decades from a market return perspective. In September, volatility did come back. A number of elements to that, certainly the back-to-school season and the risk of a second wave. Valuations potentially became a concern as everyone came back from the summer months to really start to pay attention to the markets, but also that a follow-on stimulus bill in the U.S. was at risk with the inability of U.S. politics to come together in a constructive way to continue to support the economy. But in the end, it looks like the broader market, certainly the S&P 500, was positive year to date. But what's critical is to really look at the composition of the market. It's never been more narrow, with the top names, more than 25% of the market really coming down to 6 names: the Facebook, Amazon, Apple, Netflix, Google, and Microsoft. They all had a tremendous run, these mega caps. If you take those out, the broader market was actually down 3% year to date. And in Canada, it really was gold and Shopify that had kind of been dominating the market returns. All that to say, if you weren't exposed to a handful of opportunities, it was difficult to generate decent returns this year. But it also says there's opportunities in the market, even though it does seem like there's been a strong run. With the North American Dividend Fund, we do take a total return approach. So Apple and Amazon were certainly both top contributors to the fund. So as we look ahead, the U.S. election is certainly going to dominate the news. It's a deeply fascinating election, as we all know. The second wave is here. It's real. It's happening. But that has to be offset with the promise of a vaccine, as well as other antiviral treatments that allow us to reduce hospitalizations and facilitate the recovery of those who get the virus. So in balance, it's likely to be a volatile Q4. We hope the election is settled close to election day and there isn't prolonged uncertainty. But those are certainly the dynamics we need to watch over the next 3 months.